Hello ICT traders, welcome back to the channel. In this video, I want to show you another powerful ICT trade setup. This particular setup repeats itself almost every single week. It was taught by ICT himself. You can find the original video on ICT's official YouTube channel. It is called TGIF trade setup. TGIF simply means Thank God it's Friday, which means this particular setup happens every Friday across different currency pairs and different financial assets. What I'm going to be doing right here is to practically show you how to find these setups and trade them every week. So let me show you how these setups happen. We are going to majorly pay attention to the weekly candles because that is the exact candle that will give us the kind of setup we are looking for. The weekly candle. I have some write-ups right here, some of the rules we're going to pay attention to right here. So on a trending week, whether bullish or a bearish trend, we expect to see the market retraces to at least 20 or 30% of the weekly candle on Friday. We expect to see that the market retraces to at least 20 to 30% of the entire price action within that candle on Friday. This is what that means. Let me show you. Let's say this is a weekly candle, this particular bullish candle, and it has traded till this level on Friday. So we expect to see this particular candle, the major area of the price action, that's the body, retraces to at least 20 or 30% of this entire price action. This is what we're going to pay attention to. So this retracement is what we want to trade and make money from it. That is why it is called Thank God it's Friday. So that is simply how this setup is practically seen on a weekly candle. I hope you understand that. So let me show you what that means. This is a weekly bullish candle. We want to see that price retraces into at least 20 or 30% of that entire price action of that week. This place. So we want to trade this retracement on Friday into this particular place. So the retracement might start from 9 a.m. till 2 p.m. New York time, and I'm going to show you how to find it once we go to the chart. So I have a representation of how a literal candlestick will look like if you break it down. In a bullish candle, you will find this. If you break it down to lower time frame, you will have the open of that candle. It will push lower and create the low of the week, push up, create the high of the week, and push down and close around this area. And likewise, if you measure it, you're going to see exactly how this setup happens. So this retracement from here to here into 30% of this particular candle is what we want to pay attention to. This one into this 30 or 20% of this candle. And likewise, this happens the same way on a bearish candle. Once we see price push to this level, we want to see it retrace into 20 to 30% of the candle for that particular week. That's simply what this setup is all about. Let me just show you that into this level. Now that means you will need to have at least 5 currency pairs in your watch list. In case one did not give you the setup, you're going to find it in another setup. It doesn't happen on one single pair every week. That means you need at least 4 to 5 of those particular currency pairs on your watch list. So this is a bearish scenario. Open, price move, the high of the week, the low of the week, and it closes. So let's have a practical session right here, right at this point. Let's have a practical session. We're going to start from the monthly time frame, and then we'll drop to the weekly time frame down to the 15-minute, and you're going to see how this setup practically happens. So starting from here, we're going to watch out for our top down. I'm just giving you an example. So right here, we can actually see price move to this level. We don't know what happened, where price traded. Okay, we can actually see from a very long-term perspective, price actually took liquidity here and it is pushing down into this level, retracing into this area. We had a bearish quarter of the year, 1 to 3 months, and then price is now pushing up again, trying to reach out to this particular bearish order block. At this point, let me change the color of this one or reduce the transparency so you can see it. So we can actually see that price pushed into this level and it has touched the bearish order block of the monthly time frame. So we will pay attention to this monthly candle, breaking it down into weekly candle down to 15 minutes, watching out for this setup. So we'll go to the weekly time frame. So this is the weekly time frame. Now we know that from the monthly price have actually reached a certain level where it has a tendency of giving us a very large retracement, because definitely there is going to be price action around that area. So this is the weekly candle right here. This is the weekly candle that we're going to pay attention to, this particular weekly candle. So we will also break down this weekly candle to daily candle right here. Okay, so this is the daily candlesticks. We can actually see them right here. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. Monday, Tuesday, Wednesday, Thursday, and Friday. You can actually see that this is the low of the week for that particular candle, and this is the high of the week. This is the low of the week and this is the high of the week. Even if you take it back to the weekly, you're going to see it practically. So the low of the week and the high of the week. So this is what we want to look out for. So we have a daily bearish candle on Friday, exactly as we expected. So how do we get an entry? To get an entry, we will have to break our daily candle into a lower time frame, so we can have a very good trade setup that can help us to make money in the market. So we break down this into the 1 hour and see what we've got. So this is what happens, breaking it down on Friday now. So this was the highest level, price started coming. So what we look out for is to look out for an obvious shift in market structure starting from 9 a.m. New York local time. You can bring your trading view to time zone, come here and scroll to New York local time, 9 a.m. New York local time. Simply go to Google and translate or convert this into your region time zone. Don't ask me what exact time is it in your country. Simply type it, what is this particular time in my country? You're going to see it on Google. So that is the exact time from 9 a.m. to 2 p.m. New York time. We expect to see this shift in market structure, and then we can declare this place that this is the high of the week. Up until now, we don't know that this is the high of the week until we see an obvious shift in market structure before we can confidently say that we have the high of the week, because it can go further, it can come down. So we need to see the shift in market structure. The shift in market structure is simply telling us that we are about to experience a massive pullback. Now we can even drop to the 15-minute and watch out for this. And this is how the TGIF setup is. So right here on Friday, 15-minute, this is our shift in market structure. This particular one. This is our shift in market structure, because we can see push up. The last low that price printed was right here. So our market structure shift happened at this point right here. Right at this point. This is where our market structure shift happened. at this exact point, our market structure shift happened. And what do? We can use any model of entry, even though this is a bit noisy. This entire price action here is a bit noisy, but we wait for price to come back either to this particular place. Let me show you. We have several other blocks here, but as somebody who is not watching everything that is happening here, I can see relative equal highs here forming this range. I want to see price come back to this area. If I want to take trade on Friday, I want to be in this trade from here. And of course, I can bring my stop loss to the high of the week, and my target is just right here. This is almost 1:2. At least it's not bad. And watch out for how this setup happens. You can actually see that you will get into the trade and several things happen. You have reached the target right here. Several things happen. So this happens every week across different currency pairs and different financial assets. So this is practically how the Thank God It's Friday trade setup happens. This is around that exact time we're talking about, around that time of the day. So you can actually find this original video from ICT's official YouTube channel, but I just tried to just break it down to you and show you how this works. And if you find this video helpful, let me know in the comments. And if you are not yet subscribed to this particular YouTube channel, make sure you do that before you leave here. Thank you guys for watching. See you in another video.